All right, really appreciate you joining us again today. There's not a ton going on out there if you look at the internals of the market, but we did find a few trades. Deckers was flushed at the open today, traded down below 85. That's your bogey. That's the level at which you want to sell the 80-75 put spreads in DECK, Deckers. We got this morning, we got $1.01 for selling that $5 spread. Now you can only get about 82 cents for them. So honestly, the trade is to watch that 85 level. Anytime it threatens that 85 level and you can get $1 for that 80-75 January 2011 put spread, we like selling that spread. I know Jim is thrilled about Tom Brady endorsing Decker's men's line of shoes. So there's certainly no shortage of good things Jim has to say about Deckers. We do like the stock and we do like that trade. Although from the long side, because it has run so much, we would, if you want to be long and share in that story, consider getting a completely in the money call spread. We did that last month. I think we bought the 70-75 in the money call spread for like $365, and it was worth $5 at expiration. So that's a way we like to play these names that have run huge. The other way, of course, is the call spread risk reversal, which was the other half of the trade that we did in December. We sold the 60 put against our long 70-75 in the money call spread. Okay, Thoratec. On December the 1st edition of Lunch of the Market, we actually brought you the technical level on Thoratec. $24 is a technical level that has existed in Thoratec for 5 years. Okay, so this isn't just a level that works over a day or a week or 6 months. This is a level that has been a level of either support or resistance for about 5 years now. Okay. We actually flagged it for you when it was at 24 and said, hey, it's at resistance. You can probably get long it. Thoratec is now traded up to the $29 level, and it got an upgrade this morning from UBS with a $33 price target. So the stock is trading around $29 and change, and we like it. Obviously, the call spread risk reversal that we gave you on December the 1st, you could actually put on for a credit of 30 cents. Today, we actually had to pay 35 cents. So for those of you who got on December the 1st, you're actually up 100%. Hope that worked out. Okay, yeah, stock's at 28.64. Looks like it's selling off some today. We like the July 2011 24, 29, 32 and a half call spread risk reversal. So essentially, you are long the 29, 32 and a half call spread, okay, for July of 2011, and then you're short the 24 put against it. We're not concerned about selling that 24 put because 5 times over the last 3 years when the stock has got to 24, it's bounced off of it. Okay, the company makes the HeartMate 2. It's a pump, an internal pump that you put in when somebody has heart trouble. We've got some nurses in our family that are first introduced us to this HeartMate 2, found out who the company was. The stock had traded is into the 40s, so at 28.66 and change, or 28 and change, 28.66, we like the stock. So you can either get outright calls in July of 2011, but again, we like to make the trade cheaper. So for 35 cents, you can do that 29, 32 and a half call spread and then sell the 24 put against it. Okay? I think that's okay. Veeco Instruments. There's really only 2 ways to play the pure play names in LED. One of them is, of course, Cree, which we've brought you endlessly at Lunch of the Markets. So today we're actually going to talk about the other trade, which is VECO. VECO is the ticker symbol. The stock actually has an 8.9 PE on trailing earnings and 8.36 PE on forward earnings with a peg. That's PE divided by the 5-year growth rate with a peg of 0.66. Anytime we can get a peg of less than 1 on a stock and a single-digit PE, for those of you who have followed us for a while, you know that's pretty much our sweet spot. The stock actually has $10.91 a share in cash on its balance sheet and generates $80.4 million in free cash flow. So the stock is incredibly cheap from a valuation basis. Remember, cheap refers to the PE that a stock trades at, not the actual price of the stock. Okay, the price of the stock has absolutely nothing to do with the PE. In fact, you could see a stock with a PE of 1,000 that trades for $1. That basically means that they have like 1 penny in earnings and they trade for $1. Okay, so don't focus on the price of the share. Focus on the PE ratio, which is the price divided by the EPS or the earnings. Okay, for the full year. So we love this company on valuation, single-digit PE, tons of cash on the balance sheet, 80 million in free cash flow. Looking at the technicals, the 38 level is the important level. That's your bogey in this stock. The stock down about $1.50 today. Yeah, $1.60. We like selling the January 2011 38-35 put spread. We did it this morning for 70 cents. I think you could actually get better than that right now. The spread is 75.85, so you could probably sell this spread for either 75 cents or you could try to push 80 cents. So we do like that trade. It's only a $3 wide spread, so to get 75-80 cents for a $3 wide spread, to us we really like that risk reward. Okay, thanks for tuning in again today. Hope some of these trading ideas are helpful. As always, feel free to leave comments on our YouTube channel. We always appreciate those, and we've seen a big uptick in comments and people interacting with us on our YouTube channel. We hope these things are helpful. Don't forget to check out Invest Like a Monster. We do obviously a lot of options trading here at Magnum Opus Financial. Invest Like a Monster is going to be March 18th and 19th in Orlando, Florida. Just put in MOFILAM when you go to trademonster.com to fund your account, and that'll get you into the Invest Like a Monster conference for free. Okay, otherwise it's $199 to register, and we'll see you in Orlando, Florida, March 18th and 19th. Thanks for joining us again today on Lunch of the Markets. We'll see you tomorrow.